So let me just, without any further ado, introduce them, and away we'll go. So firstly, we'll have Yaël Ossowski. He is the Deputy Director at Consumer Choice Center. Joining him will be speakers. So firstly, there will be Leon Wankum. He is a real estate developer. Third, we have James Putra. He is VP of Product Strategy at TradeStation. And lastly, Yves Choueifaty. He's the President and CIO of Tobam Assets. So welcome to our panelists.
Okay, hello everyone. Thank you very much, Stefan. You hear him on the podcast, and then he gets to MC parts of your conference. It's pretty cool. So we're talking today about investments in over-regulated environments. I don't know if Europeans know what that means, but it's what we're living under. We're in Prague, we're in the Czech Republic, we're in the European Union, and there are a lot of different issues that are coming up each and every day with regulators, regulation, and how entrepreneurs and Bitcoiners can strive. So Leon, we'll go first with you. Real estate is a big one. There's a lot of very old property across Europe. There's a lot of Bitcoiners who might be stacking sats to try to buy some kind of building or house. In terms of the regulations around this, we see that there are plenty of obstacles in the way of people who want to be entrepreneurs in real estate. You have the church, you have governments that own all kinds of property. When it comes to overregulation for real estate and what to think for Bitcoiners, what would you say is kind of the biggest problem area and where we can succeed?
Well, the real estate market is definitely overregulated. Most importantly, or especially the maintenance work. In order to fulfill so-called ESG requirements, property owners will be forced to maintain their property, which is going to be very cost-intense. And I think that the real estate sector can benefit massively from Bitcoin, because if you think about Bitcoin, Bitcoin in itself is an unregulated market. What I mean by that, the network is tamper-proof and you cannot arbitrarily inflate the supply, right? So this gives some assurance that real estate investors can leverage and they can use the existing portfolio to acquire Bitcoin, either through rental income or through refinancing their existing portfolio and taking some leverage to buy Bitcoin. This will also help them to hedge against the scenario where real estate is being disrupted by Bitcoin and Bitcoin catches the monetary premium it sits in real estate. But most importantly, it will allow real estate investors to build a capital base outside of the existing system. And that will give some more assurance going forward, also in terms of interest sensitivity and the overregulation of real estate.
And right now, if I were to try to purchase a property anywhere in Europe, am I able to go to any normie bank and show up with my massive stack of Bitcoin and put that down as a deposit? Or what is the kind of the process of regulation for dealing with Bitcoin as an asset for deposits getting into real estate?
That is a very good question. I do believe and do agree Bitcoin is pristine collateral for lending, but I think it will take some time for the legacy system to understand the use of Bitcoin as collateral, but that it's an opportunity for companies like Debify, so Bitcoin native companies that understand the value proposition of Bitcoin as a disinflationary asset that increases in buying power over time. So I believe that the services surrounding Bitcoin's use as collateral will most likely be provided by Bitcoin native companies, and then the legacy system will either use these services as well or most likely also merge with these companies.
I like that. James, we heard the traditional finance companies, you know something about this, but you also know the strenuous impact of regulations, particularly for those who wanted to get interested into Bitcoin or cryptocurrencies. What kind of regulatory barriers exist right now where you are in the US, and what does that mean for kind of the future of the business that you're a part of?
Well, first, thanks for including me on the panel. We just sold our Bitcoin business about a month ago due to some regulatory pressures that we were having. One of the challenges that any company faces in the regulatory space is The regulator's business model, a lot of it has to do with profit sharing. So most financial services firms pay a percentage of their earnings through normal activities as fines to the different regulatory bodies. So it favors companies like ours that are larger because we have the compliance teams, the legal teams, the balance sheet to go and actually engage with the regulators and handle whatever comes our way in terms of fines. It's not favorable for some of these upstart companies that are either crypto native or traditional that are trying to move their way in, because it is complicated to weave through some of this patchwork of regulation. We are fortunate that we can hire folks like KPMG or Deloitte or different law firms to give us cover on these decisions. But if it's you and I starting a company, we're not necessarily getting one of the big 4 US firms to give us cover. And so we're doing the best we can to navigate these uncertain rules. And depending on which attorneys you go to, you're going to get a different view of how to proceed. Simple things like what accounting standards to follow. That will directly impact how you operate your business, whether you're holding Bitcoin on your balance sheet or you're actually transacting in it. Things like AML KYC, although that's fairly, I'd say, robust at this moment in time. But then what are the licenses that you may or may not have to have depending on where you are in the transaction? So there's a lot to think about that doesn't favor the sort of upstart companies. And if you go Bitcoin native, you do have a bit of an advantage potentially in some of these ability to go in different jurisdictions. But depending if you want to tap US or Europe markets, you're going to have to play by certain sets of rules that are really complicated if you're trying to play in multiple markets. Like the US, we spoke about in behind the stage, there's 50 different regulators, 50 different sort of sets of ways that they're looking at your business in the US. In Europe, I had pre-MiCA, there was all the different European states you have to deal with. So it's not, it doesn't favor the small guy.
So small guy getting punched down. Yves, it was mentioned that there's troubles complying, you've got to go between the different regions. I think with your company, you guys are heavily invested in the United States, and you have to deal with the Europeans. So what are the big regulatory differences that exist between the sort of crypto or Bitcoin regulations in Europe versus someplace like the United States?
I really believe there is a huge difference of landscape between the US and Europe. If you look at it in terms of impact of the regulation on the economy, generally speaking, if you look at the banking system, for instance, you take the 2 largest banks in Europe, UBS and BNP, you add them together, they represent roughly 1/3 of Morgan Stanley. Okay? They represent less than half of JP Morgan, less than half than Bank of America, and you have Visa and you have Amex, everything is American in the banking system. If you look at the internet, also, Europe was quite ahead of the US in terms of regulation. As a result, there is no global internet company in Europe. If you look at crypto, the largest crypto exchange in Europe was ranked number 19 until it was bought last week by a US company. Today, the largest exchange in Europe is ranked 154. All of that is, in my mind, really a question of how you approach regulation. I think that between the 2 sides of the Atlantic, there is a huge difference. Very often, Europeans will look at things on the angle of trying to understand whether it's good or evil. In the US, they will look at things trying to understand whether it works or not. And if it works, they are going to take advantage of it. And it's something which is systematically true in any kind of new disruptive technology. A technology has nothing to do with good and evil. You will never be able to tell me whether a knife is good or evil. That technology works or doesn't work, and if it works, you need to take advantage of it. And this is what the Europeans are failing to do. And because they have labeled crypto as bad, as evil, so they don't want to deal with it. In the meantime, you have some entrepreneurs in the US. You have even a president candidate that has said Bitcoin will be American last week. And the difference of approach is huge. At the end of the day, if you look at the GDP gap, GDP per capita gap between the US and Europe, they were at par 20 years ago. It was the same GDP per capita. Today, the GDP per capita in the US is 91,000. In Europe, it's 46,000. And I believe that systematically, I had a meeting, I had a lunch last week with the chairman of Bloomberg. So we were 8 people around the table. And after 1 hour and a half, we only discussed about carbon and regulation. So I told him, Mr. Dorsey, can I ask you another question? Would you have had the same lunch in the US? What subject would have you discussed? He told me we'd have discussed about China, about AI, about Bitcoin, about the Fed, and probably we would not have discussed about regulation and carbon.
It comes down to regulatory compliance, right? That's what the Europeans do best. Okay, well, Leon, we talked a little bit about the impact of the regulation, both in the US and Europe. What do you kind of see that for the average real estate investor in terms of understanding what the regulations are, regulatory compliance? I mean, there's got to be, like in every case, the lawyers only get richer and richer no matter how many laws we pass, right?
Yes, I'll be honest with you. So the reason, or one of the reasons why I believe Bitcoin is interesting is because it allows you to not have to pay attention to some of the regulatory changes and some of the regulations, because quite frankly, most of it doesn't really make sense. And if you do work in the real estate industry, you're constantly bombarded with new regulations in terms of maintenance work, in terms of building standards, and if you understand architecture and if you understand building standards, you also understand that most of the regulation does not make sense. So that creates an environment where it's not fun to be in real estate, right? So using Bitcoin and funding the productivity that real estate portfolios create into Bitcoin, into an environment that can't be regulated, in my opinion, also gives peace of mind, because you don't necessarily have to pay attention to the regulation, because the principles of Bitcoin can't be regulated. And it takes you out of the survival mode and gives you a more optimistic view on your business, and it allows you to make better decisions, because you don't have to be so worried about future regulations and the negative impact on the business.
Regular Howard Rourke. I love that. Well, James, you work in the kind of fintech. Would you agree with Leon on that? Or would you say that if you are working in, let's say, finance and you want to touch Bitcoin and things, pretty much your entire job is worrying about regulation, no?
I think it gets there real quick. Anybody dealing with Bitcoin as a business starts to get to things that look like financial services very quickly. If you are doing anything that has customers and are accumulating assets under an entity, that becomes quite tricky, where you very quickly get into a regulated world. Now, the interesting part is the self-custody angle of this, where you can start to move away from the way the rules were defined for financial services to aggregate assets and customers. With self-custody models and potentially decentralized exchange type interactions, those rules don't really have a clean fit anymore, because you don't have the same type of market structure, the same type of interaction. Payment processing has a pretty good construct of rules. Does it apply for Bitcoin? Maybe. You can draw some parallels. When you look at trading and investing, if the customer holds their own assets, it's a whole different story than if the fintech startup holds the assets on behalf. One of the problems we had in the US was, for the last 10 years, most of the companies that started up in the Bitcoin space were really tech companies that looked like financial services companies. So any, let's say, layman off the street would look at Coinbase and think, oh, it's a financial services company. They've only really recently started to become that financial services company. So there's a gap in what the customer thinks they're interacting with and what they are actually interacting with. That is where regulation comes in, and some of these rules are being imposed.
And it's very similar to a lot of these fintech banks. We call them banks, but they're not actually banks, that provide financial services and allow you to have an account. It's really that license that they need to be considered a bank. And there's sort of this strange arbitrage between these different institutions, companies, and everyone's just kind of chasing that regulatory stamp to say, we are a bank, and therefore we can do X or Y.
Right.
That's kind of what people are searching for. Oh, wow.
Well, there's a lot of marketing, though. So in the US, we have FDIC and SIPC insurance. FDIC doesn't apply to assets held on a crypto venue. So on our broker-dealer, none of the cash was FDIC insured. But a lot of the entities put up SIPC and FDIC recently that's come down because the insurance policies do not cover those cash assets.
Let's see what Robinhood does with a Bitstamp and all the rest there. Yeah, so Yves, in terms of that, you mentioned how you have a lot of American firms that are kind of have bought European exchanges or European businesses. Do you think that'll be kind of a trend? Because at the same time, we do see in the United States, in Europe, there's a lot of antitrust movement as well. There's a lot of competition regulators that are getting very busy, and maybe they haven't been as loud about financial mergers. They've done it with technology companies. So do you think that that would be an impediment to perhaps any kind of future investments or economic growth, whether it be Europe or US?
For the time being, the size of the crypto market is relatively small when compared to the rest of the economy. Yeah? And I think that with the exception of Binance, probably, we are still far away from really dominating actors. There is the exception of Binance. The track record of the US with regards to controlling monopolies and anti-competition, monitoring has not been very strong in the last 20 years. And if you look at the internet, I was talking about the internet, there are certain sectors that are under complete monopoly. And whether you look at Amazon, whether you look at Google, I think that I would not say that this is the biggest threat on the crypto market. I'm not sure, by the way, that the crypto market is threatened. I really believe that there is a really different approach. In my firm, only 5% of our revenues is from crypto. So we are a regular, plain vanilla asset manager. The ratio of traders to compliance officer is 5 to 3. And we keep on receiving warnings that this is not enough. So it's today anybody can buy Bitcoin on an exchange. For an asset manager to buy Bitcoin, it's extremely difficult in Europe. I mean, in the US, it's not the case. In Europe, anybody can buy Bitcoin on the internet without any control, without any kind of threshold, etc. For a professional asset manager to own Bitcoin in his own fund, it's extremely difficult.
Absolutely.
There is a lack of common sense here. It's easier for a dentist to buy Bitcoin alone than it is for the dentist to have a fund run by a professional manager that would have some exposure, direct exposure to the Bitcoin. This doesn't make sense.
Is that because of the rules and regulation that creates that, or is it still reputational risk?
No, it's only the rules. So today in Europe, you have a standard called UCITS, and you cannot own crypto assets in UCITS fund. So if you want some exposure, you need to go to the jungle of exchanges, that most of them are abroad, by the way. They are unregulated. They used not to be regulated in Europe until 1 year ago.
So by what mechanism? Because there are some German banks that have these pilot programs with Bitcoin and crypto. What does that look like?
So it is going to change. Until recently, it was really impossible. Today, with very heavy investment, you can offer, when you're a bank, you can offer a client. When you're a fund manager, you cannot. So this is not going to change in foreseeable future for asset managers. For banks, they can sell they are going to be able to sell pure Bitcoins to their managers.
Okay, self-custody all the way, hopefully. We'll see. All right, well, we're talking about overregulation, and I also wanted to bring in the thought of other industries, because there are other products that, and entrepreneurs that have to deal with regulatory states and regulatory burdens. If we think of the alcohol market, tobacco market, cannabis market, I mean, these are all the things that I'm interested in, of course. But I wonder if there's any lessons we can pull from how governments have treated these various products versus perhaps how they will treat Bitcoin going forward. That's open to any of you.
A lot of this, from what we see, is once the government figures out how they can control and tax and create some constructs around it, it creates a box for those industries to operate in. And for a long time, it was difficult to figure out, at least in the US, what the government should do with the crypto space. If you look at, we have to file tax returns right now that check whether you engage with crypto or not. It's about 2% of the people in the US check that box. The IRS, from all the files I get from financial services, estimates around 20 to 22% of the US touches crypto. So there's a huge delta of people not self-reporting, and they're hiring a lot of people to try to figure out that gap. So once they can get a good idea, at least I believe once they get a good idea how they can tax, regulate, it'll be largely left into a space to run.
Oh, wow. Yves, do you see any lessons from that, from some of the other industries, and perhaps how Bitcoin can move forward, or do you think it will be just these small government boxes that we have to operate in?
I really believe that crypto in general is a technology. So at the end of the day, you know, you have two kinds of governments on this planet. Government that believe the people are at the service of the government, and you have some other countries in which it's believed that government is at the service of people. So I think this draws some kind of border between the two approaches of crypto, and you see that very well. In China, it's extremely difficult to deal with that. I believe that the US is changing. The US are changing. It's going. Some people claim, at least, they have understood that at the end of the day, people can be wrong or right, and it's their own choices. At the end of the day, the government shouldn't have an opinion on this kind of things. In some government, in some countries, governments have an opinion on everything, on every single thing. Okay? In the US, I think the landscape is changing. Even the SEC has changed. It's a country in which it's not up to the government to decide what is good for me. It's my choice. And I think this is something, it's a very strong value of the US, and I'm very optimistic on the fact that hopefully this will not change in the US. So
Absolutely.
I'm very optimistic on that.
Absolutely. Leon, what do you think about that?
Yeah, I agree with what you've said, and I just wanted to add something. I do believe, though, that in our lifetime, Bitcoin, just by the nature of its growth, will become more relevant than the existing system. So I think that even though the existing system that fades away in its importance is trying to fight Bitcoin and regulate it, I think at some point, and it's already happening now, they'll start to understand that they can only benefit from it. That's the game theory of Bitcoin. So of course it's important if you operate in a regulated environment to pay attention to the regulation, especially if you're a business. But I believe that going forward, governments will understand that they cannot fight Bitcoin. They can only benefit if they want to.
In history, there is no example of a technology that works that you can censor in a sustainable fashion. And try to find one. Even knives, they have not been able to forbid. Obviously, it's bad. So at the end of the day, a technology, if it works, it will prevail.
James?
Yeah. So I think it's an interesting question. Does Bitcoin eat the financial system, or does the financial system eat Bitcoin? It's kind of going financial system eating Bitcoin at the moment. I don't know. I walk a weird space where I live in both worlds. For me, Bitcoin is the option on the financial system. So let's see where it unfolds.
Yeah, I think what Leon is mentioning is specifically this idea that there will be a paradigm shift that Bitcoin could introduce as well, because perhaps we don't need to have shares of companies and corporations. Perhaps everything is just multi-sig arrangements that actually denotes what our share is of something. Is that something that you think can be put into practice? I know there's a lot of great companies and firms that are doing things just in the expo hall there that are showing us an idea of that happening, but Leon, do you think we can be optimistic about that, or do you think it's going to take another few decades and we'll have to tell our children about perhaps what's coming?
What do you mean exactly?
Are we going to have more of a kind of shift to this Bitcoin native way of structuring ourselves as investors, as individuals? Is that something that you think can already happen, is happening, or do you think it'll take a bit more time?
Okay, I mean, I think the equity market will of course continue to exist, but Bitcoin is going to going to not just drain real estate of its monetary premium, but also other asset classes with a utility value that have been used as like speculative investment vehicles to counterbalance inflation, right? So, but I think generally speaking, like the equity market, that is something that will continue to exist. And the real estate market, of course, as well, because people always need shelter or a place to produce and to consume. But Bitcoin is going to, in my opinion, change the investment landscape because people need to make, like, I don't need to invest. I can just save in Bitcoin. So now my investment decision completely changes. I don't invest to outperform inflation. I usually invest because I have a certain intention, either because there's a benefit to my business or because I believe it's important for society. But generally speaking, there's no need to invest because you can save in Bitcoin. I believe that will create a market with more resilient companies because people will pick and choose. They won't invest like now with a machine gun hoping that something works, right? So I think that's a positive attribute of Bitcoin, and that will change the equity markets for the better.
Okay, that could be interesting. James, do you see that there's an avenue for that, or?
There's a big push right now from the big asset managers to tokenize everything. So we'll see if that becomes something in the space. I definitely think that it is shifting the way a lot of us think about money and think about units of value. The fungibility of it is super interesting. It is uncertain to me what happens when BlackRock starts tokenizing real estate, tokenizing stocks. It is pretty clear to us on the financial services side that things are moving to more real-time settlement. Things are moving to more fractionalization of the assets. But we are really good on financial services of separating you from your money, which is sort of the opposite of what Bitcoin is attempting to do, to bring you closer to your money.
I see that. So that's kind of the eternal conflict. Yves, do you see it sort of that way, or?
I think that we need to differentiate between the asset and the technology. You know, an example that I often give is the internet in 1996. Anybody who understood the internet in 1996 would have tried to invest in it and would have probably invested in Yahoo, in America Online, in Netscape, in France Telecom, in Wankum, and would have lost everything. The only company that survived 1996 is a website that used to sell books when nobody reads books anymore. So in fact, we need to really segregate between the technology that has been successful, the internet, and the asset means. I am an asset manager, so I don't have a real opinion on the technology. I would say that the value of the Bitcoin itself is storage of value. Now, the blockchain can solve other problems. The most important problem that it can solve is peer-to-peer. Today, if I want to sell you an Apple share, we have exactly 15 intermediaries between me and you. And with the blockchain, when the Apple share will be tokenized, it will be peer-to-peer. Okay? Do we need to use the Bitcoin itself, or are we talking about the technology of the blockchain here? I don't know. Maybe it's the technology of the blockchain that we're talking about here. And I like to say that the Bitcoin is not digital gold, because there is an infinite quantity of gold in the universe. The Bitcoin is a new kind of Picassos, you know? Picasso, you cannot use it for something else. And in any asset, in order to be a good storage of value, it needs not to have in an industrial use. As soon as you can use it for something else than storage of value, those two functions will compete against each other, and very often the industrial use will kill the use of storage of value. So I would segregate completely between the Bitcoin as an asset and the technology on one side, and maybe the layers, the overlays. The overlays will solve other problems, probably. If you look at liquid, if you look at this kind of things, probably, you know, the peer-to-peer thing is something huge. Peer-to-peer in digital is a huge avenue for financial services, etc. But it's not really the Bitcoin.
So, Leon, what is your reaction to that? Are you all for kind of tokenizing everything? I know you've been studying Bitcoin for a long time. You wrote sort of your thesis on it many years ago before most people here probably even heard of it. So What do you think of that, the sort of tokenization frenzy? Because I've heard this, been at many conferences, talked to journalists and many entrepreneurs and bankers in this space who all talk about putting everything on the blockchain. What do you think of that?
Yeah, so I think in regards to settlement, the DLCs are really interesting and the Lightning Network. So I think that is the most interesting part about Bitcoin when it comes to settlement. And a tokenization of real estate, in my opinion, does not make sense. It's an oxymoron because you create a lot of, first of all, there's an additional third-party risk, and you don't own anything, right? So let's say I own a token that is tied to a building in another country. I have to trust the emittent of the token. I have to trust the individual owning the real estate, and most likely the thing that I'll get is some cash flow through owning the token, but I don't really own anything, right? And with Bitcoin, I can't own Bitcoin, but I can own the private keys, and I can possess Bitcoin. I have full cryptographic control of Bitcoin. I can use it to store value, and I can also use it to incur debt because it's pristine collateral for lending. So those two functions, store value and collateral, these two functions sit in real estate right now, and I think people believe by owning a token of real estate, they'll be able to store value and build wealth over time, but you can just buy Bitcoin, right? It's a much better option.
And the other point to add too is that you can take your private keys and restore that on any wallet, any app, anywhere that respects the Bitcoin protocol, whereas if you tokenize things in a certain way, you have to use the JP Morgan rails, I assume, or something like this.
Yeah.
I'm nowhere near these rails, but...
They'll probably securitize the asset first. So one step away from the physical asset, we securitize it, then we fractionalize it. So now you're multiple steps away from that actual underlying asset.
So there are always going to be intermediaries involved.
If you let Wall Street build it, absolutely.
Lord help us. So, okay. So that is an interesting kind of point. And I know that there's, we've always talked about New York as this central sort of Wall Street innovation when it comes to finance. Are there other hubs of innovation that we think that are not as heavily regulated, perhaps? I say this in the shadow of Milei had a recent conference at the Cato Institute in Argentina, in Buenos Aires. Many people are excited about Argentina right now. Many people are excited about Milei, about finally a libertarian, classical liberal president. We thought we'd never get one of these guys, but he's promising huge slashes to public spending, cutting down regulations. Could that be something that an innovation hub could take root in, and we could actually have great innovation like Bitcoin companies, Bitcoin native protocols? Would that work?
Possibly.
Okay.
You see it today, a lot of the providers are moving from US to Asia or even over to Europe, where there's a little more stability a little more clarity in the regulation. What happens though is if you were to take Argentina and grow it, they need to tap outside capital markets in order to be able to, one, fund their operation, but also gain customer base. So at the moment that they need to enter Europe or the US, they've got some challenges to deal with on the Argentinian side.
So it doesn't matter where you're based, what matters is where the customers are and where the money is.
Yep.
Yves, are you hopeful of a kind of scenario like that, or you think we have to be way more integrated, and like James is saying, you have capital markets in one area and you might have your customers elsewhere?
I think innovation is something which is by nature decentralized. We are all here together because of a guy that is unknown, that was made nobody knows where, and made a huge innovation. So innovation, there are some very small countries in very hostile environment that are hubs of innovation, which are far away from any kind of clients. So innovation is, I would say that what matters the most is probably for innovation to flourish is liberty, it's diversity, it's recognition of the value of labor, the fact that you are not only benefiting from natural resources or this kind of things. And as soon as you have some liberty, as soon as you have some respect of diversification in terms of, and as soon as you give value to labor, innovation will flourish and probably will create value. So it can be anywhere, and probably in Argentina, but in some other smaller countries as well.
I hope so, yeah. And there's a lot of...
Look at Switzerland.
Switzerland's a good example. Liechtenstein is a good example. I mean, Estonia, there's been a lot of really interesting companies and unicorns that have come out of there, and that's all because of clear rules, smart people. And
now, to bring that to scale, to bring the innovation to scale is a different subject.
Yeah.
And this here, you need a financial system which has nothing to do with the added value of logistics. And when we're talking about peer-to-peer, the idea is to simplify logistics, so that I can sell not only a security to you directly, but also I can write a contract with you that is completely, that will be executed, that carries no legal risk, etc., etc. Now, bringing things to scale, this is the real added value of the financial system. Hundreds of billions were invested in Amazon before it posted positive earnings. Hundreds of billions. And in order to be able to do that, you need a very strong financial system. This is why, by the way, innovation comes from all across the world. But scaling things is easier in the US than it is elsewhere. Why? Because of the extreme strengths of the US financial system. Yeah. You could not have brought Amazon to scale in any other country of the world because of the lack of a strong financial system. So the financial system is extremely useful. I really believe it's useful. And the financial system has nothing to do with logistics. It's about risk-taking. It's about leveraging on innovation, taking risk, because funding Amazon for 20 years before it posts any earning, it's a huge risk. And this is the merit of the financial system.
Absolutely, just like buying Bitcoin early.
Look at AI today. We have a company which has created $3 trillion of value, NVIDIA. They started with, gamers' screens. Then what was the most lucky encounter of NVIDIA? Bitcoin miners. So if in the US they used to prevent Bitcoin mining, NVIDIA would not be here. Today, there is a huge gap between Europe and US from an AI point of view, but we are making up for this gap in Europe. We have just recruited, I have great news for you, 130 lawyers to write the regulation of AI in Europe.
Fantastic.
Yeah,
so we can be optimistic now.
That's the great meme of the moment is, America innovates, Europe legislates, and it's now the cap does not fall off anymore, it stays on, because of the regulations.
What was just said, though, about the capital markets is super important, because in the US, there is a culture of investing. There's a culture of venture capital, putting money on ideas and taking these long-dated bets, and that's what makes it stand out, where if we started a company in Argentina, had a good idea, we would have a harder time to succeed versus taking that same idea and dropping it in Silicon Valley as an example, where you have access to talent, you have access to capital that can help fuel your idea to the next level.
Yeah, it's not a question of innovation, it's a question of bringing things to scale.
To scale, that's right. Leon, do you think we have enough capital in Europe to kind of get things going, to whether it be in real estate or other industries, to kind of grow that? Or is that something we'll have to tap from the US?
Well, I would not invest into a European-based company, to be honest, myself. So I would obviously prefer the US capital market or Bitcoin.
There you go,
Yeah.
Bitcoin wins.
That's the problem. There is capital here, it just is preference to invest somewhere else.
Absolutely, we see that more and more. So I want to thank the panelists for sharing your thoughts. This is great. I learned a lot. Hopefully the audience did too. So thank you guys so much, and thank you for being here, part of the conference.
Thank you.
Thank you all.
Thank you.
Whoop.
Thank you very much, gentlemen.